Viewers, we are today discussing on job work under GST. We have come up with a set of small videos, short videos, which we will be creating up to 15 to 20 minutes at the max, and giving our views and the GST position presently on these various areas. So today's topic is job work under GST. So just to give a background of the basics of job work, to understand what actually the transaction contains and what is the GST position on a general basis on job work. First and foremost, for it to be job work, the job worker is supposed to perform some kind of services on the goods which are belonging to the principal. Now, in this situation, there are two people who are there, wherein the activity is of a service in nature, although it pertains to goods. So ideally, the principal sends goods to the job worker. Either he sends it directly from his location or from his vendor's location, the goods move directly to the job worker to reduce on the time and the cost of storage and transportation. Next, the job worker performs his activities and then will send the goods either back to the principal or he may send it directly to the principal's customers. Please note, in this situation, even direct exports are also allowed from the job worker premises subject to certain conditions. Job worker is required to raise only a service invoice for his services provided. They all fall under HSN 9988. You can see it in the service classification, which is available in the CBIC portal. Movement of goods either from the job worker's location to the principal or from the principal location to the job worker, or any other type of movement, either where it is coming directly upon import, going directly from the job worker premises for export or to another customer. In all these situations, the transaction has to be understood very clearly as to how the movement of goods happen. But for the purpose of just pure job work, the movement of goods require a delivery challan and a corresponding e-way bill, where there is a further supply which is happening, that is to directly to the principal's customers or for export, then tax invoice or export invoice may require to be raised additionally. Principal must update all these details of goods which are sent, received back in form ITC 04. There have been various waivers in the past in relation to the time limit. Please note, there are no late fees prescribed under the GST law for filing form ITC 04. They have also further reduced the requirement to file ITC 04 for persons with turnover above 5 crores. It is on a half yearly basis, and those who are below 5 crores, it's on an annual basis. Earlier, for everyone, it was on a quarterly basis, so they have relaxed the requirement of filing this form ITC 04. Another key area which generally is missed out in the business side is the conversion ratio, which is inventory to job work register. How do I match the goods which have gone out and the goods which have come in? Say you have sent goods A to the job worker and he is sending back goods A, maybe then the conversion ratio is not required. But say in a situation where you give raw materials A, B, C to the job worker and he gives back to you a semi-finished goods in the form of say product X. Now, how do you know how many elements of A, B, and C has gone into making one product X? So to identify this, a conversion ratio has to be maintained internally to ensure that whatever has gone out, to verify what has come back in. It also gives a control over my own job worker and his efficiency in using the raw materials. Various rates for different types of job work, they're all available in the GST portal and even the service classification. Please note, it ranges from exempt supplies and goes up to 18%. There have been various changes in the recent past in relation to job work, which has to be verified very carefully before you apply it for your business scenarios. Next is the valuation for job work activity. We will enumerate that in the coming slides. Time limits also to send back the goods will also be discussed upon. So coming directly to some of the issues for the job worker, ideally valuation would be my service activity which is performed and for which I will charge them the goods. The job worker is allowed to use certain amount of goods towards his providing his job work services, but it should not be completely the job worker's goods which is being used for the activity. Then it may not qualify to be job worker, because one of the principal requirements is that the principal's goods needs to be used, and it is only a repairs, maintenance, or any other sort of ancillary products that can be used by the job worker to provide his services. In relation to valuation, one of the most important points that has to be verified is, has the recipient, that is the principal, borne any expense on behalf of the job worker. This is arising out of section 15(2), the valuation provision which is there in the GST law, wherein if it is in such a situation, the valuation for the services has to include those expenses which are borne on behalf of the job worker. One of the most common examples in this area is the amortization cost of tools. And even you can refer Circular 47/2018, which enumerates various areas and how the costing and the valuation must be considered. Next is on the movement of goods, where job worker is registered. The goods can move directly from his premises, that is the job worker's premises, to any place if the job worker is registered. If he is not registered, then principal must add it as an additional place of supply to move the goods directly from that job worker's location. Assume a scenario where the job worker is in another state and the principal is in another state and the job worker is not registered. In such situations, the goods must always come back to the principal's location. There is no option to move the goods directly from the principal's job worker's location. Alternatively, of course, the principal can ensure he deals only with registered job workers, or if it is very important, he may look to take a registration in the job worker's location and also add that as an additional place of business. So delivery challan under Rule 55 contents are mentioned therein. Please ensure that your document is as per the contents mentioned in Rule 55. E-way bill is also mandatory for your goods value of more than 50,000. Export of services is something which is very common question in relation to job work services, especially after the February 2019 amendment, wherein Section 13(3)(a) proviso was inserted in the IGST Act, wherein they have specifically mentioned that any treatment process on goods which are done on a temporary basis will be exempted, will be considered as an export or service, where the place of supply would be deemed to be the location of the exporter, which is the location of the customer, which would be outside India. In these situations, satisfaction of the export conditions, which are also defined in the IGST Act, can be done based on this change which has been implemented. Refund would be eligible for those job workers who are also providing exempt services. So please keep in mind, exempt activity is also eligible for refund under Section 16 of the IGST Act, read with Section 54 of the CGST. Service invoices which have to be raised by the job worker have to be verified in relation to, like I said, the service classification and the GST rate as per the CBIC portal. Where e-invoice is applicable, please ensure that it is followed. Presently 20 crore is the limit, and from October 2022 onwards it is going to be reduced to 10 crores. So there have been recent changes from 5% to 12% on leather products and clay bricks with effect to from 18 July 2022. This is through the 47th GST Council meeting and the notifications which came in lieu of that. There is also a 12% default rate for other manufacturing related job work services not elsewhere covered. Please refer the Circular 126, wherein this details of which all situations would cover under this 12% rate. Earlier, before October 2019, it was 18%, after which it has been made 12%. Please note, it does not cover all the scenarios which one may think of, and this is not a default rate for all job work services. This is only for certain manufacturing services related to job work which is not elsewhere covered, which means if it is covered in the job work rates, otherwise it would have to follow that rate and not the default rate of 12%. Coming to repairs and maintenance, whether this is a job work, a very common question which is asked. First and foremost, no, it is not a job work. Job work is generally considered to be a part of the manufacturing process, If the entire manufacturing activity is outsourced, then it may become contract manufacturing, which is also not covered under job work. So repairs and maintenance, there's a advance ruling in relation to Bhanuka Enterprises. Please note all advance rulings are not binding on the other SSCs. It's binding only on the person who has made the advance ruling and his jurisdictional officer. But you can understand the element of the difference between repairs and maintenance and job work through this advance ruling. A registration requirement, either you can take a voluntary registration to ensure that the supplies can happen directly from your location, or where your turnover is going more than 20 lakhs. Even 20 lakhs limit is applicable even for interstate supplies. You can refer notification 7/2017 IGST, which is providing this exemption. Please note under section 24 of the CGST Act, it was made mandatory to be registered for interstate supplies, but through this notification, this relaxation has been provided. The other thing which generally has to be seen in a business sense is option of considering a goods versus service scenario, wherein if the job worker has high ITC accumulation in lieu of his various capital goods or raw materials which he is purchasing to perform various types of activities, in such situations, whether it can be considered as a transaction where he purchases the goods from the principal and sells the goods back to the principal. In this situation, he'll be able to utilize more of his credit because the transaction value, of course, will increase in these situations. And because he's utilizing his ITC, he will be able to give a better competitive rate. And this will also enable the principal to claim such ITC. These are generally done in scenarios where the principal is fine with sending his goods as a sale and repurchase. Wherever there could be some IP linked goods, then maybe that this transaction may not be advisable. But always to understand the cost benefit analysis, it has to be verified with the job worker. So next is the job work service eligibility. If he's using his certain goods and where the essential goods only are provided by the principal, it would remain a job work service, and ITC also is eligible on these other ancillary goods for the job worker. Job worker services at the principal premises. In these situations, the job worker need not be required to file any form. The additional requirement is that the principal also need not file form ITC 04 because there is no movement of goods. DCE waybill also is not required for the transaction. Returning of the goods, as you all know, 1 year is the time limit for inputs, 3 years is the time for capital goods. There is an extension which is allowed upon the commissioner's approval, but please note this is prior commissioner approval and not post commissioner approval. Molds, jigs, dies, there is no time limit for returning the goods. That is, once I give as a principal to my job worker these goods, there is no requirement to return it back to the principal in any specific time period. The basic underlying requirement analysis, if there are any goods, inputs, capital goods, or molds, jigs, dies sent to the job worker, the credit is eligible for the principal on these goods. The date of receipt when it's directly sent to the job worker, that is, it is not first received at the principal's location and then transferred, where directly sent from the principal's vendor's location to the job worker. The date of receipt of these goods by the job worker will be considered for the purpose of the calculation if the goods are not returned within time period. What happens if we are not returning the goods back within the specified time period? The tax payment is required to be made by the principal, not by the job worker. It is to be made by the principal, along with interest at 18% per annum from the day the goods are sent out. So where he's sending it out from his premises, of course, that would be the date. When it is received by the job worker directly, then that would be the date. The next very important question which comes up is whether ITC is eligible upon the when this taxes are to be paid by the principal, because the goods are already lying with the job worker. So in this situation, tax invoice has to be raised as on date. And in this situation, if we are going to supply it to the, it's already supplied to the job worker, in my view, the credit would be eligible. And The best way to ensure that there are no difficulties in this, because of the simple fact that the job worker may not be able to pay the principal against this tax invoice, he can raise another invoice against the invoice that he's received to send the goods back and also send the goods back physically to the principal. What this ensures is that the tax does not become a cost to the in this transaction, and only the interest would be the cost for delay in return of the goods. Next is the ITC on the job worker goods. Like I mentioned, the principal can avail the ITC even when it's sent directly or where it is sent directly from the import, mostly generally from the custom ports. The goods are directly sent to the uh, job worker's premises. The credit is based on the bill of entry. ITC 04, there are two main tables, table 4 and table 5, where it provides various types of identification of goods which are sent and received back. Like I mentioned, implementation of conversion ratio for tracking and accountability is something that has to be maintained on an internal basis. This is not in the online form ITC 04. Waivers, of course, have been there in the past. Movement of goods from one job worker to another. So here this is possible, but a fresh DC plus EWA bill must be raised because of a simple fact that EWA bill cannot be replicated with the same DC reference. So it has to be a fresh DC plus EWA bill. Earlier in the excise regime, service tax regime, the piecemeal basis movement of goods by the job worker was allowed through endorsement of the DCs, but that would not hold good in GST. Job worker will again have to raise fresh DC and EWA bill. Any losses, wastage which arises during this job work activity at the job worker's premises must be disclosed in table 5 of form ITC 04. This helps identify a simple fact that whether the losses are industry level losses, which means, say, I am doing a activity in relation to steel, and in relation to that, my job worker is having losses wastage up to 2 or 3%. In this situation, whether that is my industry standard, say industry standard is 0.2%, then this is a point of concern to see that, okay, there may be something which needs to be looked into from the principal's point of view. Department would be specifically interested to ensure that there are no losses from the point of view of supply, for the supply which is happening. So whatever is coming in to the job worker, which is not being a tax paid goods, but when they are supplied, I say I get goods worth 100 rupees and I'm supplying only goods worth 60 rupees from the job worker's premises, then the 40 rupees, where is it going? Is it sitting in losses and wastage? Is it still sitting as an inventory which is still to be worked upon? These are things which then are able to be understood based on such disclosures. Next is the requirement of registration, of course, where the unregistered job worker is located in a state other than the principal's registered state, and the job principal wants to send the goods directly from the job worker's premises, then he would require to take a registration in that state and at that place is an additional place of business. Sale of scrap, the job worker can sell directly in his own name and pay the GST wherever it is required. But if the job worker is not registered, he would have to return the goods back to the principal, or he can also sell under the principal's GST invoice directly from his location. So the principal would pay for the tax where the job worker would not be registered. Goods lost or destroyed, these are situations where it could be a disputable area. First and foremost, where goods are lost and destroyed after reaching the job worker's premises. In this situation, maybe due to some certain factors at the job worker's premises, these goods have been lost or destroyed. The principal can raise the invoice, but job worker would not be eligible for the credit. The reason why I am saying the principal is required to raise the invoice is because of Schedule 1, Clause 1 of the CGST Act, wherein it requires the the principal to pay tax on the goods where there is no consideration but the ITC has been claimed. In a situation where these goods are lost and destroyed before reaching the job worker's premises, there could be a requirement of ITC reversal under Section 17(5)(h) by the principal. So in either case, the credit in relation to the goods would not be eligible if these goods are lost or destroyed. Now, coming to a situation where these goods were used for the purpose of job work activity, and these semi-finished goods which were then created out of these raw materials, that semi-finished goods has been lost or destroyed. In this situation, there is a view that because the words used in section 75 specifically are goods which have been lost or destroyed, in this situation, such goods, that is the raw materials, were not lost or destroyed, but they were used for the purpose of business and therefore the credit should be eligible. But this is a disputable view and the client's risk appetite is very important to be understood before taking any decision. Coming to responsibility, in the concept of job work, all the responsibility lies with the principal because of the simple fact that he is the one who is paying the taxes on the goods and is required also to take the credit and pay the taxes against the goods which are directly sent out from the job workers' premises. Job workers who are working outside India, the principal would still be liable to file ITC 04 because of the fact that the requirement of the job work definition requires the principal to be registered. Otherwise, it is not asking that the job worker must be registered in GST. So in this situation, the job worker being outside India would still require the principal to file ITC 04, but the same services may not be considered as an import of service because of the same reading of section 13(3)(a), wherein the goods which have been sent outside India, the place of supply would again be outside India. In this situation, would the import of services be attracted? In my view, no, because of the place of supply provisions. So this is again something which may need to be considered, may not have been the intention of the law, but this is what the present analysis is. With this, we have come to the end of a simple but quick deliberation on the job work under GST. I hope this video has been useful to those who have been on this call, and any clarifications, queries can be directed to my email ID, which has been provided on the screen. I thank you for your time and your patience.